What happens when inflation eats away at your savings? You came here for the truth, so let me unveil that for you. I've got a very important video to get into today. Number one, wanted to talk about the repo madness. The repo madness, spoiler alert. I told you $1 trillion was coming, and we are just shy of that today. We'll get into this first. And then number two, I want to look at what's happening with inflation as it relates to wages. This is so key because look, if you've got your wage increasing by 2% or 3% a year, maybe even 5% a year, depending, of course, if you actually got that wage increase. Many people didn't. In fact, they got their wage cut. What happens when you've got inflation running at 5% plus? It's eating away at all of that. People are struggling just to stay afloat. And then number three, I want to look at what's going on with food prices. These are increasing all over the place. I'll give you some updates. Let's get into all of that and more. Let's go. Okay, here we go. This is just shy, I'm telling you right now, $992 billion for this reverse repo operation. The Federal Reserve, all the bankers, all of those in the media have suggested, don't worry, because the system is running properly. That's right. You've got $1 trillion needing to move through this system instead of going to productive means, instead of being lent out to people and businesses and so on. No, it's going through the Federal Reserve. Speaking of the Fed, this is a quote here. This article, in fact, is talking about all of the different members of the Fed and recent quotes they have had, including Bullard and Kaplan and so on. But Bullard had this to say: this is a volatile environment. We've got upside inflation risk here. Creating some optionality for the committee might be really useful here and will be part of the taper debate going forward. Number one, I wanted to just talk about the fact that they're acknowledging there is a taper debate going on and will be going on at some point in the future officially. So that's important because before this moment in time, they never even acknowledged that at all. So that's coming right here now. But I think it's also important here to look at some of these individuals that are saying, okay, we have some actual real risk that inflation could move further than what we thought it could be, and do we have control over it, and are we going to use our tools to, push that down? We'll see what happens, okay? No, this is what I wanted to start the video off with, really, because you're looking at the job situation, and I think for a lot of people, even if you look at all the analysts, they look at this really closely. And while I don't think that's accurate in any way, let's just look at this here. U.S. private payrolls increase solidly pending home sales rebound. So those are the things, okay, the economy is reopening and so on. You can see the ADP employment reports coming directly from them, 692,000. The small business report, 215,000. You could see this in the chart form over the last little while. I mean, just showing you basically throughout this period, there was a dip down as, these stores started to close again, as the lockdowns began once again. But things had been rising ever since on average. It's come down from the peak that was experienced in the previous month. But I think that this is overall moving in an upward direction. You got the reopening. Now summertime, what happens in the fall? What happens in the winter? We'll see, right? Just like last time around. This is so important though, because even those people who are employed, number one, did they get their hours cut? Do they have full employment? What I would call full employment, meaning they want to work 40 hours a week and they're getting paid 40 hours a week. They're actually doing it, okay? Or did they get their salary cut? Is that happening? Okay, that's what's not being addressed, of course, in the statistics that they give you. But then on top of all of that, you've got inflation. Inflation eats at surging U.S. pay, surging, I don't even know where they get that. I mean, if you remove the amount that's coming from the government, it's not surging at all. Absolutely not. And that I've statistically proven that here on the channel. And to see it over and over being truly, it's truly a lie when they do this to you. And I know I say things that are unpopular. That's why this channel doesn't get popular. unfortunately. Americans are enjoying outsized pay boosts this year from desperate employers, but the raises are failing to keep pace with the surging prices for everyday goods. Look, if McDonald's is willing to give you an iPhone as a sign-on bonus, you got to realize what all of this means. Yes, there are companies out there that are giving people higher salaries and so on. I get that. But the vast majority are probably not better off. I mean, I've shown you the statistics around that to prove it. Eating away, U.S. inflation reduces spending power from higher wages. And you can see the black line is average hourly earnings year over year. And then you've got the lighter line there, which is the personal consumption price index, the PCE rate. The Federal Reserve and the way that they absolutely love to show their numbers. It's just the same chart, essentially. What we're looking at here is a situation that isn't unsustainable over the long term. There's no doubt about it. Look at corn prices. So they had come down. If I pull out the highlighter here for just a second, they had come down, around May. This started to take a dip down from its peak, but now you can clearly see that this has been rising once again. And that just gives us a little insight into what's happening with commodities. This is following closely with the commodities benchmarks. And you look at that. I mean, look at the right-hand side here where we can see crude oil at around $74 a barrel. You're looking at, everything basically but gold and silver are just going up like crazy on average. I mean, you got to take it for what it is. And you can see the dollar at the same time showing strength. Now, this is in the short term anyway, from let's say mid-May or somewhere around that point here, it has been accelerating. It did do the same pattern previously from the beginning of 2021 and then fell after that. But at this point here, you're seeing so much strength coming from the US dollar. Where is it going to land? Where is it going to be? We'll see in the future, but I do think it's important to analyze what happens as it does and look back to the statements and see and realize that what they do, quite frankly, is a disservice to you. Coming soon to the Money GPS Insiders, you're going to get some actual real deal information that will be included in the daily emails. Okay, I'm talking about original information that is not available elsewhere. Okay, so you've got to check it out at themoneygps.com. You sign up for the Insiders. It's totally free. I will email you 5 times a week at this point here, and it's going to get you the video of the day in a very short period of time. I'm going to be including original information, so you definitely don't want to miss out. I've got thousands of people who have already joined up. I'm sending out these emails on a daily basis. Definitely click on that, and you will be able to, fill in your email address right here, input that, and I will be able to communicate to you directly. Really simple Money GPS insights today. The number one thing is that prices are rising faster than wages, and that, quite frankly, is unsustainable. Number 2, 80% of the public are worse off today than they were before. Number 3, the mortgage and rent crisis that's going on today are simply being covered up. This is being done on a multi-level scheme that I've talked about numerous times, and that cannot be going on forever. Something has to give. Many of the big names in this financial industry have shared their opinions about inflation. You look at sort of the smaller fish, Bank of America Fund Manager Survey, not small by general means, but if you look at it compared to the big names out there, I mean, it is very clear that all these big names are suggesting inflation is very frightening today. And Larry Summers, this is substantial inflation for real. It is not reflected in price indices, but it will be or should be soon. Very interesting. So that was the information I talked about in the previous video. I've already given you that, and now it's being discussed in the media. The inflation rates of supply-constrained goods are substantially above trend. You could see used cars plus 27%. Furnishings are up, and you just go down the list. I think it's pretty important to see what people are actually paying for stuff today. It's much higher than we have ever been seeing before. The Chicago PMI slips in June after hitting highest level in almost 50 years. I don't think I pulled up a chart on that, but I think it's clear that there was an acceleration of all of the PMI related data that had come out. And now in this case here, the Chicago PMI has come down quite a bit. So is that just a simple blip? These kind of things do happen, but what is the trend? So let's cover that in a short period of time. I'll be able to give you some new information. So let's stay tuned. Inflation on the menu as U.S. restaurants pass on soaring costs. Wait a minute. No way. Are you serious? Of course. Of course. This is what they're going to do. All these businesses are going to do this. If they've got higher prices coming in, they're going to pass that on to the customer. If they look at let's say for each meal, they're making $10 profit. Okay, let's just say after they pay turning the lights on and paying the waiters they figure it out, okay, $10 profit. And then now suddenly all the costs are higher, so it's $6 profit. Are they going to do that? Or are they just going to increase the price by $4? Absolutely. That's what they're going to do. And guess what? Procter & Gamble's doing it. Heinz Kraft is doing it. Name it. I've shown you the businesses. All of these mega conglomerates. It's not just a small business down the road. I've experienced this myself. I've seen how much the groceries, I've seen how much the restaurants have increased their prices. Whether or not it's they should be doing it and so on. I'm just letting you know statistically, and you could see there are hundreds and hundreds of comments coming in all the time telling me about this, confirming this. Lumber prices dive more than 40% in June, biggest monthly drop on record. Okay? Biggest going back to 1978. It's down more than 18% in 2021, headed for the first negative first half since 2015. Okay, you look at that. It's a disparity with some of the other ones, certainly, but it did get a little bit over-exaggerated, and there's a lot of speculation behind it, of course. Oil prices could skyrocket if OPEC Plus fails and pledge to deliver more supply. This is something that's always going on back and forth. Quite frankly, I'm tired of it, but this is what they do. They try to jack up the price of oil, always keeping tensions real high. The inherent instability of the Goldilocks market consensus. Too much confidence is placed in the view that inflation rises will be transitory. So I'm noticing that a lot of the big names are always, or not, I shouldn't say always, but right now are talking about this. The fact that it doesn't look like inflation is transitory, or at least we shouldn't be so, carefree or careless about it. And this is just getting into the fact that what I've highlighted in the thumbnail is that if you're part of the 1%, if you're part of the top 5%, or maybe even the top 10%, well, then you're going on a luxury spending spree, at least according to the Washington Post. But everybody else, not the same situation. And why? This is it. You see what has happened with the global stock and bond market values increasing over time. And you look at the central bank assets, the complete correlation, but the average person, maybe they have some wealth inside of these funds, but ultimately the majority of their wealth comes from the value of their home, and many of them take a very long time to pay that down. So the wealth isn't something that they can necessarily extract unless they could do a home equity line of credit and so on. But of course, when you get into a boom and then bust cycle, they end up running into a problem, as we saw a decade ago. Well, I'm going to end the video there. If you found it informative, hit that thumbs up button. Have you seen this video yet? If not, you definitely want to check it out. Click it, and I will see you there.